Well, those GDP numbers were, weaker than expected. And I think that, with a lot of economies seeing a better summer into the fall, we would think that those GDP numbers from Japan wouldn't be as terrible as they were. And I think, kind of justifies the Bank of Japan's, neutral stance, against the tightening backdrop of all these other central banks. The yen, the weakness of the yen ultimately, while it does, bolster inflationary pressures, is also good for Japan's economy. So I think that, it's these dual forces that the BOJ is, fighting with right now. The yen is weaker today. And I think, overall, the data justifies its weakness. And with the Fed continuing to march forward with raising interest rates, with other central banks continuing to march forward with raising interest rates, I think that there's going to be ongoing demand to continue to sell yen and buy those higher yielding currencies.
What are your preferred bets in the EM space? And also, I remember post the war, because of the oil trade in ruble, there was this big bounce back that we'd seen in the Russian ruble. How would you place your thoughts on where the ruble goes from here?
Well, I don't trade the ruble quite actively, but I think, overall, there's still a lot of risk in the currency. And I think, ultimately, with this news that we just had, investors are, going to find more reasons to stay out of it. And, I think I agree with the markets that there's not going to be a global response, that global action response. I mean, we may see more sanctions, but we're not going to see a military response, is what I'm trying to say. And as a result, that is going to limit the near-term reaction in the ruble. But ultimately, I think everyone is still looking at more sanctions. They're looking at more shutdown of the economy to the rest of the world, and that's not going to help the currency at all.